Hey, folks, there's a lot of people, you and me included, wind down and take stock of the last 12 months. We've put together what we're calling the Property Investment Essentials episode from the Wealth Coffee Chats this year. Best of 2023. Went by fast, I reckon, folks, but it's containing useful tools, tricks to help you navigate, the journey of wealth creation, folks. This episode that you've got to listen to now is one we recorded a few weeks ago with Dr. Andrew Wilson. If you don't already know, he's one of Australia's top property economists, a bit of a guru, really, and he's letting us all know what's coming up for the Australian economy, especially around property investing. Covers off interest rates, property cycles, and much more, folks. So grab yourself a coffee, you know the drill, and let's have a Wealth Coffee chat. And remember, gang, if you're eager to dive deeper into this topic and more topics and explore the world of property investing in Australia for you and your portfolio, make sure you register for one of our upcoming property investor webinars. Click the link below, folks, and you'll see the lineup for 2024, and you can discover how to kick off your journey or supercharge an existing property portfolio. Best of luck. Take care. Bye for now. Welcome to another Wealth Coffee Chats. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong life for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Hello and good morning, everyone. Welcome to another Wealth Coffee Chat. I hope your weekend was well. Got a few of the early birds already up and at it. Chris, good morning to you, mate. Hope you're good. Luke's there too. Danny is already up and at it. Hope you got a coffee. This is my second. I haven't had a chance for it to kick in just yet. Morning, Ian. Good to see you, mate. Thanks for dropping by. While things are warming up, folks, I'll do the quick intros. Oh, there's Andrew as well. Jason Witten's my name. You guys know that. But if you don't, if you're new, give us a shout out in the chat. Say hello. This is where we catch up usually every weekday. Didn't do it on Friday. Flew up to Townsville on the weekend. Perfect time of the year, actually. Not too bad. Where we spend a little bit of time maybe trying to sort a bit of fear from fact, folks, in a casual way. This is, the morning conversation over a coffee. Read the newspaper, have a look at a bit of the headlines and make sure that we're staying on track. You guys know the drill. Property investing's a long-term thing. There is not a get-rich-quick scheme that I've found in 20 years of property investing when it comes to real estate. Well, residential property anyway. It's about buying something really well and don't bloody sell the thing until maybe 15 or 20 years later. That's the general idea anyway. So what we do, we get together each morning and try and make sure we stay on track, folks. It takes a bit of time. And we have a bit of a chat about it. So welcome along. Good to see you. I have a guest this morning, an awesome special guest. And tonight at mentoring also, Dr. Andrew is going to be with us talking about a few things. Lots going on, lots not going on. But we want to find out what is actually the important stuff for us to pay attention to, folks. And the stuff to ignore. But at the end of the day, one thing that's on everyone's mind right now is, one of the things that interest rates have paused. I'm pretty keen to see what's going to happen on this thing. Interest rates have paused 4 months in a row. What's next for the interest rates? Big question mark. There's a few predictions out there. We're not going to go to 13% interest rate. I found this the other day, which is pretty interesting. 1990, I think this was. Back in the 90s, 13%. I don't know if can it ever get to 13% again? Maybe we'll ask Dr. Andrew in a minute. The millennials were hoping the property market would collapse. I don't think that's going to happen. And the big four are saying, hey, listen, interest rates might go down. Might go down. Maybe another one up and then down. Who knows? What's the question? And Westpac, if it does get to 2.3, what would it look like? There's plenty more to talk about. So I'll bring our guest on and we might talk about what's going on. Is the property market off and running already? Who knows? Well, maybe Dr. Andrew does. Let's get him up and have a little chat to him this morning. He might give us a little bit of an insight of what's going on. Dr. Andrew, welcome to the show, Wealth Coffee Chats.
Yeah, g'day, Jason. Amusing to see those clips that you brought out there. Gee whiz, bank forecasting is not a precise science, is it? Gee, would you listen to them after their record of the last few years?
I don't know. Yeah, exactly.
The poor old Reserve Bank, I think it leads the charge in getting it wrong. But anyway, it's good to see, as you said, we've had a pause 4 months in a row in interest rates. In fact, we've had 5 out of the last 6 months with interest rates steady. Still a bit of work to do on inflation. So the Reserve Bank's always reminding us that, hey, don't get too excited here. We may have to put them up again. And we are certainly, well ahead of our target in inflation. So there's a long way to go. In fact, we've got to halve inflation to get back to the target. So it may mean some more interest rate increases. I think the key there is oil, to be quite honest. And of course, we have the issues in the Middle East at the moment, which is always problematic for the price of oil. And hopefully we don't have that fueling inflation. But look, the price of oil is still pushing $90 US a barrel, which is below where it was at the peak last year, when it was at $124 US, which COVID stuff. But but before COVID, the price of oil sort of hovered around $30 or $40 US a barrel. So we're still well ahead of that. But that pays its way into inflation across the board as petrol prices rise. Everybody's got to cover that. So, I mean, that's the thing the Reserve Bank will be worrying about. And the other big driver of inflation has been house
pricing.
Yeah, particularly rents, and building costs. So, but, I can't see the prospect of cutting. The banks are like, trying to talk the Reserve Bank into this because, I mean, cutting rates would be, believe it or not, bad news, because they'd only be doing that if they needed to give us a kick along. Yeah. And that would mean that things were starting to struggle a bit. But the banks love movements in interest rates. That's grist to the mill for them. Because I'll tell you a little story in terms of data, Jason. When we last raised interest rates, which was back in 2011-12, which is, a while ago, that was the mining boom, if you remember that one. So we had a similar problem. Inflation was rising, so we had higher interest rates. And interest rates peaked then at just under 5%, right? And now, of course, we're about 1% below that. So we're still quite low compared to the historical position on interest rates. And you showed that before with that 13% graphic, right? But we're actually 1% higher with our mortgage rates now than we were when the official rate was 1% higher. So the banks have been a little naughty, and they've sort of gradually increased their margin over that last 10 years. Now, these are just average variable rates, but, this is why the banks love that movement in interest rates, because they can tickle it up a little bit more, a little bit less, a little bit more. And before you know it, over 10 years, you're paying a 1% more for your mortgage on a comparison with interest rates, right? So let's be very clear about the banks. They are a business.
They're not going broke.
They are a business, mate. They're not going broke. There's only 4 of them. So they can basically do what they like. And maybe there's some questions there about maybe they should be a little bit more accountable to the consumer. Yes. Just as an offset for all those billions of dollars of profit they make. What is it, every month? But anyway, it's all good.
Do you think there's a possibility, I talked with a lot of people about the possibility of interest rates getting into double digits sort of now or into the future, how does that work out in your world? Is it possible? Do you see something like that? Or is it like, Australia, people couldn't handle that sort of mortgage stress and, we would avoid it, no matter what?
I think we're close to the top of the cycle, even though inflation is far from dead.
Yeah.
And the target's still, a long way off the Reserve Bank's target. But I do think that the Reserve Bank and central banks everywhere have basically decided we're not going to go hard this time. Yeah. We're not going to throw out the baby with the bathwater. When we mentioned those 13% rates, Jace, when you look back there, we had double-digit unemployed, And that's the trade-off. Yeah, we get rid of inflation, we whack up interest rates till it just, knocks the economy on the head. But that means big time unemployment. And, as we saw in the recession of the early 90s, that destroys lives, mate. It's bad news. And it really took a decade for us to recover from that 1990 recession, So I don't think we're going to go down that route. I think all central banks have sort of decided, yep, we're going to live with higher inflation for a bit longer now. Jury's out on what that means. But I think that's the plan at the moment. Because, mate, we've got the strongest economy in our history at the moment. In terms of the labour market, we've never seen figures like this before. And when we did have 3% unemployment rates, it was decades ago, and it was in the time when there was only one income earner per household, right? Now we're giving jobs to everybody,
Yeah. So we've got 1 million people, or the, immigration and population increases is at record highs, all-time highs, etc. We've got all-time lows when it comes to construction and delivery of housing. That's putting pressures everywhere on the marketplace. What are your thoughts in there? Can we build 1 million houses, 1.2 million houses with the government incentives coming up? We've never built 250,000 houses in 1 year ever. So, no,
it's not going to happen, mate.
Not going to happen.
And the government's not building them. It's the private sector that builds them. The government's just saying, well, we're going to give you all the cheering from the sidelines we can do. And it's not going to help. You need, hammers and nails and, timber and tiles and bricks.
Need builders
and builders making a profit. And builders are disincentivized at the moment because house building costs are skyrocketing and have been skyrocketing. Even though they've come back a little bit, house building costs are still rising at around 10% plus per year. Now, how does a builder make money and make a profit on that? Well, they don't, and that's what we're seeing. And that's just another roadblock to building these 1 million, 2 million, 50 million houses, whatever the aspirational target is. I think all governments can do now is try to look after the marginalised. There's going to be more of them that people just can't get into a house anywhere, rent or buy. So they've got to look after them, because I think it's an insoluble solution. And, Jason, we're not alone here. Just about every advanced economy you can name is having the same problems with skyrocketing rents and a shortage of housing. And it's just all that red tape, green tape, stuff that's finally caught up with, reality and surging demand and just way undersupplied. So get used to rents still rising. And I tell you what, if that's not an incentive to be a homeowner, I don't know what is.
So I know you're coming tonight, and I know you've got a 9:30 appointment this morning. But what are we going to talk about tonight? Give us a quick few minutes on the headlines of tonight's presentation at Mentoring.
Yeah, well, we'll obviously be looking at what's happened this year, and it's been a very good year for the housing market this year. Certainly catch up here.
The interest rates, Yeah.
Well, that's right. 12 rate rises, and yet we're going to record double-figure price growth in most of our capital city markets. Who would have believed? Particularly, and let's get back to some bank bashing, what the banks predicted for this year. God, how wrong were they? They were like 10, 20% falls. But we've been in catch-up mode. Jason, there's no secret to this. It was good value market. And the point is now that a number of the markets that will record strong growth are starting to taper off. And that's because higher prices, higher interest rates, higher house prices, higher interest rates, and higher prices generally start to impact affordability. So I don't think we're going to get double-figure prices growth next year unless we do get a cut in interest rates. But I still think we'll have positive growth, and it'll be growth that is around about the inflation rate, which is typical of Australia's results. So we'll talk about that tonight. We'll look at the underlying drivers, why this will occur, why we're just starting to see a tapering in price growth. Prices are still growing, but not at the rate they were through a very strong late autumn and early winter period. And Sydney and Melbourne are still just below their previous price peaks, Jason. But Adelaide and Brisbane and Perth are all at record levels at the moment in terms of their house prices. So it's been a very positive year for the housing market. We'll look at the stats. We'll look at the rental market, which is sadly a horror story for tenants, good news for landlords, incredible rent increases over the last year.
Yeah.
We'll look at the supply side, why we're undersupplied. We'll look at the demand side, migration just surging at the moment. Of course, people got to live somewhere. And we'll finally look at the forecasts for this year, which are pretty much done and dusted, and have a discussion about next year. So plenty to ruminate on, and lots of data and facts, because we deal in the facts.
Love good data, love good facts. Yep.
Yeah, and not just one set of facts like prices, where we look at the whole gamut, and we'll especially look at what happened on the weekend in terms of the weekend auction market, which is always a very good forward indicator of what's happening in the market generally, and is telling us that even though it's still a seller's market generally, it's certainly not roaring along at the levels it did a few months ago, but still certainly more buyers out there than sellers. But this is what we see as the year draws to a close in auction markets, where we get, sellers are a bit more keen to get rid of their properties because it's Christmas and we want to get it all done and dusted. So there's a bit more leverage from buyers. So we'll discuss all of those things, and how we're going to fit it in the time, I don't know, but we will. So plenty to take away, and there'll be copies of the latest by housing market rent and house price reports available through that presentation, through QR codes. So you can have your cameras ready and get a copy of those reports. So I'm looking forward to it as usual. It's always a great night, a great gig. And particularly given, for homeowners particularly, it's a good news story. But isn't it always a good news story generally for if you're a homeowner or either an owner-occupier or investor? And like you said at the beginning, it's only a matter of time, with Australia's housing market, which once again has, proved all the doomsayers wrong. But, is it Groundhog Day? We keep saying this, but, whatever.
There you go. Well, I think if they keep going, maybe one day they'll be right, but not this year.
I don't think they will, I don't think they will, particularly when we stop building houses. I mean, you've got to live somewhere. Yeah, I hope we're not heading for the cardboard box on the sidewalk, but heaven forbid. But that's what's happening.
That's what's going on. Well, we're looking forward to that update tonight. Dr. Andrew, thanks for joining us this morning. Let you go. I know you've got a pressing one at 9:30, so appreciate that, and look forward to catching up with you tonight.
Yeah, great to chat, Jason, and good luck to everyone.
Cheers now. Bye, mate.
See you, mate.
Well, there you go, folks. Dr. Andrew making sure that the facts are shown, and tonight we're going to get a bit more into the nitty gritty of the data. So make sure you come along tonight, folks, and hang out and hear what Dr. Andrew's got to say. So there you go. Anyway, I'll call it done and dusted for Wealth Coffee Chats this morning. Always nice to have someone, a bit of a guest on the show. But, what's in store for us? 2023, almost done and dusted. How fast has the year gone? Absolutely crazy. And 2024, just around the corner. Anyway, folks, there you go. Good to have you here this morning. Thanks for hanging out, as always. If you've got any questions, leave them in the chat. Happy to circle around and see what you guys are talking about, and maybe bring a bit of something to Wealth Coffee Chats in the morning. But until tomorrow, folks, we'll do it again, 8:10. You guys know the drill. You guys take care, and bye for now. Adios. See you tonight, folks. Welcome to another Wealth Coffee Chats. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well.